What's up, guys? JC with Big Game Real Estate. I'm here with Big Money Mel today, and we're talking tenants. So, guys, we do a lot of videos and we talk about what to look for to find your investment property and looking for dilapidated properties to re-tenant, to reposition. We're going to chat with Mel here today. Mel's had fitness centers, gyms, poke places, restaurants, you name it, and we're going to kind of get into what he looks for as a tenant. So, what I want you guys to think about is, again, you're out there, you're driving for dollars, you're looking for properties, you're looking for investment properties to pitch your investors on where there may be an opportunity to raise the value of that property. So, Mel, give us the rundown, man. You've had a lot of businesses. You're out there, you're looking for space. How do you go about the process? What are you looking for in this case, a retail space that gets you going to get out there?
Well, I guess when it comes to retail, my first thing is the volume of traffic. If I'm looking for a downtown retail space, I'm looking at the volume of walking traffic. Especially if there's no parking.
Okay.
Volumes of traffic, density of population is important. If you're looking at a shopping center, then you're looking at, okay, how many parking spots are there? How many cars are passing per day? So everything comes down to volume and density. So if I'm looking for whether it's a fast food restaurant I'm doing or fitness center, the population is important.
How about
comes down to traffic? You know what I mean?
Okay, so traffic. How about all right? So I buy a shopping center. I got a vacancy. You're looking at my center. Are you looking at competitors, or you don't care about competitors? If I buy a center and I'm looking to reposition that property, I'm thinking, all right, I got 3 vacancies. Is this a good buy? Right?
Yeah.
Can I easily get a tenant here? What should I be looking for at you as a tenant?
Well, so here's a couple of things, right? I think there's a misconception with competitors. Competitors can bring you business because, it's similar to, you see a lot of fast food chains that are close to each other. Why? Because somebody may want something different than what they normally had, and you already know that the customers exist if
Sure.
somebody's been there for a while.
Sure.
I think when you're going to a shopping center, I do think your co-tenants matter. So who else is on, who's anchoring the shopping center, what kind of, cars are, in there. That's a big thing too, is understanding that there's a major difference between east and west, north and south. One side of the
Correct.
street or one side of the highway can be far different than the
Right.
other side, especially with negotiation rents.
Right. So what we talk about, guys, is, as we call, the going to work side of the highway and the coming home side of the highway. So think about it this way. If I buy a building on a highway and I'm looking for a bagel guy and I'm on the side of the road where everybody's going home at the end of the day, not a good location for a bagel guy, right? All those guys are going to be going to work. We want to catch them on that route. One of the things that you said that I wanted to ask on there was, you mentioned parking, okay. You mentioned the going to work side of the road, but what was the other thing you mentioned I wanted to capitalize on?
The anchors, the co-tenants.
Co-tenants, right? So you as the investor, you got to think about, if you're picking up a shopping center that has 3 or 4 vacancies and you're in talks with someone, maybe let's say like Mel here, and he's got a poke place, right? And if those of you who don't know what poke is, it's essentially the Chipotle of sushi, right? So I want to make sure that if I have 1,000 square feet and I'm going to lease it to Mel, does that eliminate my ability, if I have a 5,000 square foot restaurant and it's a big market for sushi, okay, does that eliminate my ability to lease it to the bigger site? So we went over that in another video. Those are called exclusions. Each tenant has an exclusive. So you have to have a little bit of strategy, even when you're getting the offers for places, to figure out, hey, is this going to limit my ability? The biggest example I always talk about is fitness spaces, right? So Mel also had a fitness space. I'm going to let him talk about that in a moment. But again, if I have a 20,000 square foot vacancy and a 5,000 square foot vacancy, who do I really want my gym in, right? I want it in the 20,000 square foot space. So what would I do if I had an offer for a 5,000 square foot space? Well, it's pretty easy. I might give them an exclusion for fitness for any tenants 5,000 or less, because I don't want to lose the big deal over the small deal. If I can get LA Fitness in there at 50,000 square feet, I don't want to have JC Functional Training at 3,000 square feet and not be able to do that LA Fitness deal, or cost myself money to buy them out of the lease, right? So Mel, in your experience, you've had a lot of leases. Help the guys out here with some of the things that they as landlords should be looking for to protect themselves with tenants. We hear a lot about COVID clauses. What if the business shuts down? What if the economy shuts down? How do you see that? Obviously, you're speaking as the tenant, but what are some of the things you look for to help these guys out as landlords?
Yeah, so a lot of my landlords, especially with renewing leases, they all put in different types of COVID clauses because obviously a lot of the landlords got hurt during that time period. As a tenant, and you have it from both sides, right? The tenant wants to be able to get out if there is a major issue like that, and then the landlord, you still got to pay his mortgage, right? The banks are still going to collect. You're most likely not going to, unless you're a AAA tenant, you're not going to get those clauses removed. Landlords are just, it's going to be an everyday thing. They're going to be, in all your leases now. The biggest thing for you is just to understand that if something does occur, like COVID again, what are you going to do as an individual in order to keep your business going? It happened to us. We had one store, we never closed. We stayed open the entire time during COVID. We had to pivot. We had to change a lot of the things we were doing, but we still utilized the space in order to drive revenue, in order to still make our rent payments on time. A lot of people didn't do that. They're dealing with some of the consequences now. So you have to just understand that when there is a time that's going to occur that you don't have any control over, you have to figure out what you can control and what you're going to do.
Right. So guys, as the landlord, what he's saying is the tenant is responsible for the rent.
That's it.
Right. So you're the investor. You're the landlord. You're not their partner in the business.
That's correct.
You're not responsible for paying the rent. You got to make sure that you're protected. So if a tenant comes to you and they're looking for some type of, clause, hey, if the economy shuts down, you got to be really careful with what you allow, because remember, you have a shopping center. You may have 5 or 6 new tenants. If your center only has 8 tenants in total, you're now down over 50% of your rent. Okay. So what else, Mel?
And just to add on that is, as a landlord, you don't want to lose tenants, right? You want your tenants. So at the same time, those clauses are there to protect you, the landlord, but it doesn't mean that you can't work with your tenants while they're going through what they're going through. If your tenant is showing the ability to do something, you're workable because you're still making your mortgage payments. You're still, there's a buffer there for everybody to kind of work together. But if your tenant is like, oh, well, fuck this, my doors are shut, fuck you, not pay you, well, this is why you have a clause.
Right, and that's a great point. Listen, obviously there are leases in place for a reason to protect both the tenant and the landlord. But there does come a point where you may have to, quote unquote, break the lease in a way that makes it work for both parties, right? If you have a tenant, if there is an economic shutdown, and you have a tenant that's willing to stay and they're trying to pay rent, maybe you give them half rent for a few months. Maybe you put it on the back end of the lease. Maybe you structure it so you make it so you're not going to lose a tenant over the long term, especially in what may be a tough time. So, Mel, tell us a little bit about. I know you've had some restaurants. You've had some fitness concepts. You mentioned that looking for foot traffic, looking for vehicle traffic is an important one. You mentioned parking. What are some of the things as a tenant, once you find your space, right? Or if I'm your broker and we're out looking at a few spaces, what are some of the things you're going to look for from the landlord to entice you to get that space?
So the biggest thing usually is whether there's TI improvements. If you're going to improve his building, are you going to get some type of money back for things that you can't take with you if you leave? Other things are build out times to get your build out done. Nobody wants to be paying rent when their store's not open, right? So you want to be able to try to negotiate with the landlords for a certain period of time. And landlords, a lot of commercial.
Remember, they're the landlord.
Yeah,
they're the landlord.
So to me is you guys have to be able to be willing to understand that tenants, especially if you have a new tenant, a person who is doing their first location, you have to plan for a certain period of time that they're not going to get open on time. They're not used to the permit process. They're not used to the contractors. They're not used to things that may pop up that they didn't see before. Your experienced companies that come in, they have a timeline, you know, to get things done, and they're usually within that timeline. I will tell you this one thing I learned over the last 3 years with building out locations is I learned this from a Chipotle that was being built down in Hillsborough. Is as a landlord, you can request both contractor and tenant to enter into a bond agreement. So, for example, a bond gets put in place, and what happens is the contractor only gets paid once it's complete from the bond company. It costs the tenant a little bit more. It guarantees payment for both sides, and that the work is going to be done correct and on time, because there's a bunch of clauses in that. So it is something as a landlord that you can request your tenant to have in place to make sure that they, that things, kind of go according to plan.
Right,
for
and guys,
added level
to add on that again, you as a landlord, and we're getting a little bit into property management now, which is not the focus of the video, but you as a landlord, you want to make sure that any tenant that you lease a space to gets a clean lien waiver from their contractors. That's to ensure that once they open, they don't owe, $30, $40, $50, $60,000 to their contractors. Now you might ask, well, why would that really matter? Well, remember the first thing he mentioned was tenant improvement dollars. So again, when you're buying your location, you're going to consider the work that needs to be done. You're going to lease this space out. Okay, maybe you give them $20 a square foot. So if it's 1,000 square feet, you're giving $20 a square foot in tenant improvement dollars. That's $20,000. Okay, and that's meant for, it's not meant for furnitures, fixtures, but it's meant for the build out of the space. But remember, if you've repaid that money to him, you only want to repay, you want to make sure he has a clean waiver from the contractors, because you don't obviously want him to pocket the money. And there's things we'll talk about in lease negotiations and how we do that in other videos. But again, guys, the whole purpose of this was to kind of get an idea of what are your tenants going to be looking for. It's important for you guys to kind of put yourself in the mind of the tenant when you're purchasing something that is going to be a multi-tenant property. Again, we talked about those freestanding pad sites, those ground leases, that pad site at the corner of a signalized intersection. We know, okay, we're going to go to, back in the day it was the drugstores, but we know who we're going to go to, our fast food concepts. But if you're not going to do that, if it's not a super obvious reposition, what is it that you need to know and understand to improve your chances of leasing that space as quickly as possible, so you can cash out refinance once we get those leasing signs? Or if you have a short-term hold position, you obviously want to get the property back out there on the market, and you want to make that money, and your tenants have to be open and paying rent in order for you to do that.
And speaking of payments, you guys want to be up to date with things. Automate everything that you can. As landlords, don't take a check, set up the automatic payments. You guys want to cash out refinance, then you're going to want to show that payments are coming in on time, your books
Correct.
are clean, you're not waiting for checks. So set up the automatic payments. It makes it easier on the tenant, it makes it easier on you. They're not worried about it. Make everything automatic, guys. There's enough software out there and things today, just you want everything just to be done that way. It's easier on the tenant, man, I'm telling you. Especially somebody, first time business, or even with multiple. If it's automatically set up, you're not waiting for something, they're not trying to figure out where their checkbook is, you guys are paid, their stuff's done on time, and it just makes it easier for everybody, guys, especially on the payment process.
So, all right, guys, that's going to be it for today's video. Drop a comment below. Let us know if you like this. This is our first interview together, guys. We're going to be doing some different topics. Mel's got a lot of experience, not only in the retail world, also in some of the finance world. We're going to get into that in other videos. We'll try to make it a little bit longer. Drop something below. Let us know if we should do more. Ciao.